Welcome to our deep dive analysis into Bharat Forge Limited, a global leader in forging and a cornerstone of the Make in India initiative. As we look toward 2026, the company is undergoing a massive transformation. No longer just a supplier of truck components, Bharat Forge is reinventing itself as a diversified industrial powerhouse. For VCs and institutional investors, the narrative here is shifting from cyclical automotive revenues to high-margin, long-term contracts in defense, aerospace, and green energy. By 2026, the company's strategic pivot is expected to yield significant alpha. We are seeing a move from traditional engineering to high-tech manufacturing, leveraging a legacy of precision to capture the next generation of global supply chain needs. This presentation outlines why Bharat Forge is a must-watch ticker for your 2026 growth portfolio. The numbers tell a compelling story of resilience. Bharat Forge is targeting a 15% revenue CAGR leading up to 2026. This growth isn't just about scale, it's about quality. We are looking at EBITDA margins consistently touching the 25% mark, driven by a better product mix and operational efficiencies. Unlike many of its peers, the company maintains a healthy debt-to-equity ratio, ensuring it has the dry powder needed for strategic acquisitions and R&D. For an investor, these metrics signal a company that can grow sustainably without over-leveraging its balance sheet. The focus remains on sweating existing assets while investing in high-yield tech-driven segments that will define the 2026 fiscal year. The biggest catalyst for Bharat Forge's 2026 valuation is its defense vertical. The company has moved from making parts to building entire systems, like the ATAGS artillery guns and the Kalyani M4 armored vehicles. With an order book already exceeding 3,000 crore rupees, the defense segment is the crown jewel of its growth strategy. As India pushes for indigenization, Bharat Forge is the primary beneficiary. By 2026, we expect the defense business to contribute significantly more to the bottom line, with export orders from global governments adding another layer of recurring revenue. This isn't just a domestic play, it's a global defense hardware play. Diversification is the ultimate hedge against market volatility. Bharat Forge is aggressively expanding its aerospace portfolio, supplying critical components to global OEMs. Simultaneously, its investment in e-mobility, including a majority stake in Torque Motors, positions it at the heart of the EV revolution. The goal for 2026 is clear. Non-automotive revenue should exceed 50% of the total mix. This shift transforms the company's valuation from a cyclical auto component multiple to a high-growth industrial tech multiple. Whether it's jet engine components or electric powertrain systems, Bharat Forge is embedding itself in the technologies of the future. The core industrial segment remains a powerhouse of cash flow. In the energy sector, Bharat Forge is a dominant player in oil and gas components, benefiting from the global recovery in energy capex. Furthermore, its focus on the construction and mining, or CPM sector, is yielding high-margin results. These sectors are less about volume and more about specialized engineering and high-performance materials. As infrastructure projects ramp up globally through 2026, the demand for Bharat Forge's heavy-duty forged products is set to soar. This vertical provides the stable bedrock upon which the more speculative defense and aerospace ventures are built.
Bharat Forge's footprint is truly global, with state-of-the-art manufacturing facilities in India, Germany, and the United States. This geographical spread is a strategic advantage, allowing the company to serve global clients locally and mitigate supply chain risks. Their investment in R&D centers across these regions ensures they stay at the cutting edge of metallurgy and manufacturing technology. By 2026, the integration of these global assets through smart manufacturing and Industry 4.0 is expected to drive further cost reductions. This global supply chain integration makes them an indispensable partner for multinational corporations looking for reliable, high-tech manufacturing at scale. From a valuation perspective, Bharat Forge is entering an inflection point. Currently trading at attractive PE multiples compared to global peers, the market is just beginning to price in the defense and aerospace upside. Strong free cash flow generation is a hallmark of this business, allowing for both reinvestment and shareholder rewards. Most analysts maintain a strong buy consensus as we approach 2026.
citing the de-risking of the business model and the massive headroom in new verticals. If you are looking for a company that combines the stability of an established giant with the growth trajectory of a tech-heavy industrial, Bharat Forge is the standout candidate. In conclusion, the Bharat Forge story for 2026 is one of vision, execution, and transformation. As a leader in the Make in India initiative, it is uniquely positioned to capture both domestic growth and global outsourcing trends. The 2026 roadmap is robust, backed by a diversified order book and a commitment to sustainable dividend payouts. For investors, VCs, and partners, this is the time to evaluate the long-term value creation potential here. Bharat Forge is not just forging metal, it is forging the future of global industrial manufacturing. Thank you for joining us for this investment pitch. We look forward to seeing how this 2026 vision unfolds in your portfolios.